Today we're diving into the remarkable surge of Wellgistics Health Inc., WGRX on the NASDAQ. As of October 24, 2025, WGRX closed at $1.19, marking an astonishing 195% gain from its previous close. This kind of single-day rally is rare and immediately draws the attention of traders and analysts alike. With over 326 million shares traded, far surpassing its typical daily volume, something significant is clearly driving this move. In this video, we'll break down what's happening, why it matters, and what technical signals are flashing for both bulls and bears. Let's start by looking at the price action and context behind this breakout. Volume on WGRX exploded to over 326 million shares, compared to its 3-month average of just under 9 million. Such a massive increase in trading activity often points to an event-driven catalyst or a sudden shift in market sentiment. This isn't just a routine uptick, this is a flood of interest, possibly from news, rumors, or a technical trigger. When volume surges like this, it can amplify price moves, but it also raises questions about sustainability. Is this the start of a new trend or just a short-lived spike? Let's see how this volume surge fits into the recent price history. Looking back over the last 3 months, WGRX has seen its share of volatility. The price ranged from a low of $0.359 to a high of $1.73, with several notable spikes along the way. For example, August 18 saw a 20% jump, August 25 brought a 73% surge, and just yesterday, October 23, the stock climbed another 9%. These swings show that WGRX is no stranger to dramatic moves, but today's rally stands out as the most significant. The stock is now trading near its 3-month highs, having broken above its recent range. This sets the stage for a closer look at the technical indicators. Short-term moving averages like the 5-day and 10-day SMAs are well below the current price. The SMA 5 sits at 55 cents and the SMA 10 at 0.555, while WGRX trades at $1.19. This sharp divergence signals a powerful breakout, as the price has surged far above its recent trend. When a stock moves this quickly above its short-term averages, it often attracts momentum traders, but it can also mean the move is overextended. Let's see how the medium and long-term averages compare. Medium-term moving averages like the 20-day and 50-day SMAs show the prices above the 20-day 66 cents and just above the 50-day $1.01. However, when we look at the 100-day and 150-day SMAs, the current price is still below these longer-term averages, $1.03 and $1.83 respectively. This tells us that while the short-term trend is extremely bullish, the longer-term picture still reflects a prior downtrend. Sustaining this rally will require continued momentum to flip those longer-term signals. Exponential moving averages, EMAs, react faster to price changes. The short-term EMAs 5 and 10-day are also well below the current price, reinforcing the breakout. However, the 100-day and 150-day EMAs remain above the current price, suggesting that the stock could face resistance if the rally continues. This divergence between short and long-term averages is a classic sign of a potential trend reversal, but only if the momentum holds. Beyond the standard SMAs and EMAs, other moving averages like TEMA, DEMA, WMA, and TRMA all lag significantly behind the current price. This confirms just how rapid and detached this upward move is from recent trends. Adaptive averages like MAMA and FAMA also show the price has surged beyond their adaptive levels, highlighting the extraordinary nature of this rally. Such detachment often signals caution, as prices can revert quickly if momentum fades. Bollinger Bands help us gauge volatility in overbought or oversold conditions. WGRX's current price is above the upper Bollinger Band $1.07, with a BB position of 114.8%. This is a rare occurrence and often signals that the stock is overbought. When prices break above the upper band, it can mean a strong trend is underway, but it also raises the risk of a pullback if buyers lose steam. Traders should be cautious when a stock is this extended. MACD indicator is showing a bullish crossover, with the MACD line above the signal line and a positive histogram. This supports the recent price surge, indicating that bullish momentum is building. However, the absolute MACD values are still negative, reflecting that the stock was in a bearish trend before this breakout. This means the bullish move is new and not yet deeply entrenched, so continued momentum is key. Relative Strength Index, RSI, is at 65.7, approaching the overbought threshold of 70. This indicates strong buying pressure but not yet extreme. Meanwhile, the stock RSI-K is at 100, which is fully overbought, suggesting the stock is at a peak relative to its recent range. These readings highlight strong bullish momentum, but also warn that a pullback could occur if the rally becomes overstretched. Stochastic oscillator measures momentum and potential reversal points. For WGRX, short-term stock K5 is higher than longer-term values, reflecting recent strength. However, none of the readings are in overbought territory, which means momentum is building but not yet at an extreme. The low stock D values show the stock was weak before this rally, further confirming the sudden shift in sentiment. Momentum indicators like Momentum 10 and ROC 14 are strongly positive, confirming the rapid price increase. However, longer-term indicators such as PPO and TRIX remain negative, reflecting the stock's prior downtrend. The high price acceleration value shows the rate of change is accelerating, consistent with the huge daily gain. This mix of short-term bullishness and long-term caution suggests the rally's sustainability is still uncertain. Volatility is a key risk factor in this rally. The ATR 14 and TRNG values indicate large daily price swings, while volatility 30 at 37% highlights significant instability. Such high volatility is typical for microcap stocks during breakout events. While this can create opportunities for traders, it also means the risk of sharp pullbacks is elevated. Managing risk is crucial when volatility is this high. Volume indicators are off the charts. The VWAP is just below the current price, suggesting a premium, while the Money Flow Index MFI 14 is at an extreme 94.55, indicating overbought conditions. On balance, volume and accumulation distribution both show significant accumulation, confirming strong buying pressure. However, such high MFI readings often precede a pullback, so traders should stay alert. Trend indicators like ADX 14 at 41.75 show a strong trend is in place. The plus DI is well above the minus DI, confirming bullish dominance. However, CCI 20 and Williams % are both in overbought territory, and the Arun indicator suggests the trend is new and potentially fragile. The trend strength score and trend quality index are robust, but overbought signals mean the trend could reverse quickly if momentum fades. Other indicators add more context. The parabolic SAR is well below the current price, supporting the bullish trend. Beta and correlation values suggest moderate to strong market alignment. The pivot point is at $1.14 with support at 0.919 and resistance at $1.42. Technical and momentum scores are strong, but the risk-reward ratio is low, highlighting the need for caution. The daily return of 195% is impressive, but such moves often attract profit-taking. Linear regression analysis shows a slightly negative slope, indicating a mild downtrend over the regression period. However, the current price is 44% above the predicted value, marking this rally as a significant outlier. Such deviations often occur during event-driven moves and may not be sustainable unless new catalysts emerge. This reinforces the idea that today's surge is exceptional compared to recent trends. Sum up the technical picture, WGRX is flashing strong bullish signals, a massive daily gain, record volume, bullish MACD crossover, strong ADX, and price above key moving averages. These factors confirm a powerful short-term breakout. However, the move is so extreme that it's triggering multiple overbought warnings, which can often lead to a period of consolidation or a sharp pullback if momentum doesn't persist. Several indicators are now in overbought territory. Stock RSIK at 100, MFI 14 at 94.55, CCI 20 at 205, Williams % are near -17, and the price well above the upper Bollinger Band. These signals suggest that while the rally is strong, it may be running out of steam. Traders should be prepared for a potential pullback or sideways movement as the market digests these gains. Key levels to watch include support at 0.919, 66 cents and 55 cents, and resistance at $1.42, $1.73, and $1.83. If the price holds above the pivot $1.14 and upper Bollinger Band $1.07, it could test higher resistance levels. However, a break below short-term support would signal a reversal and potential for further downside. These levels are crucial for managing risk and planning trades. Given the current setup, traders have a few options. The bullish case relies on sustained volume and price holding above key levels, with potential upside to $1.42 or higher. The bearish case focuses on overbought signals and the risk of a pullback to support levels. Some may choose to take profits after such a large spike, while others might wait for a pullback to enter. Long-term investors should look for confirmation of a trend reversal before committing. As always, risk management is essential in such volatile conditions.